Food prices are different than commodity prices. They're actually going to be flat this year. So for the consumer, that's good news. You know, having the same price for the next year versus same thing they kind of have today, it's going to kind of help them heal up. They can't expect to see a big drop in food prices because the retailers, the food manufacturers, they're still struggling to make money at these prices.
We're going to see some reaction as the market continues to adjust and financing comes due. A lot of the loans in commercial real estate, the real bulge will be in the next couple of years. As I mentioned, in total, nationwide, we could see about 1.2 trillion in commercial real estate loans coming due. They will be at a higher financing cost, even if the Federal Reserve lowers interest rates compared to the last round before interest rates really spiked. And that's going to be a challenge, particularly in certain markets around the country. As demand for labor begins to soften, we think that will take more pressure off of wages. I might add, wages have been slowing, wage inflation, despite the fact that the economy has held up well, an indication that wage inflation, wage pressures have been very much influenced by the slowing in inflation overall, tied to an improvement in supply and some easing at time in demand. If you really squint hard, we think the economy will be slowing a little bit over the next couple of months. And then with the Federal Reserve cutting interest rates, we think late spring, early summer, that will help get the economy moving a little bit more quickly, a little stronger finish than what we expect to see in the next few months. Well, a saucer-shaped recovery is simply one where the downside is very gradual, and then the recovery itself is very gradual. So the trajectory it traces out is more like looking at a saucer and looking at that profile. It's very flat, very shallow.
Our guess is, and it's only a guess, the way the trends are moving, we expect to see the Federal Reserve cutting interest rates beginning in June. May or June, more likely June. We're guessing 2 or 3 cuts before the Federal Reserve moves to the sidelines. That's a pretty short cycle. We could see it more extended than that.